I want to see how you see today shaping up. What's your word of the day?
Patience.
Really?
I mean, this is a time when markets are distorted, whether it's the earnings season games are too low, too high, but really, again, the election. The October periods before U.S. elections have usually been distorted periods. Now we have all this data to mine to say, well, this has usually been weak and we have a great relief rally. After the last two elections featuring the same cast of characters, returns were 5% and 7%. So there's a lot of gaming around this, a lot of apprehension, and we'll need to be patient to look for, again, opportunities that arise from the election results.
Did the math change at all yesterday? Kamala Harris, with the interview on Fox News, really going out of her way to say that she's a different person than Biden. Her presidency is going to be her own. Does that change the math? Because I thought the thinking before was she was just going to continue a lot of Biden policies.
I would just be a little bit careful. Again, there are betting market odds. There's polling data. How reliable any of this will be within the margin of error. We're not suggesting that everyone take bets on these outcomes, but we do think that the differences in policy of these two candidates are significant enough to really have large moves in global markets, perhaps more impact outside the United States than within.
All right, so you're looking outside the United States. What's your thoughts on today's ECB decision? A potential rate cut, back-to-back meetings, first time in, I believe, over a decade. How meaningful is that for the European equities, and is there kind of a read over to the U.S. equity?
Well, look, the ECB never reached the same level that the U.S. did. We're going through a little bit of a rethinking moment here in terms of the Fed. The exchange rate's really important. Obviously, if you're like we do, if we're caring to earn our returns in U.S. dollars. But the issue here is ultimately what U.S. policies, will drive the Fed to either stay on the easing course or move back from it. And that depends on the outcomes of these two candidates. So it's a lot like looking at the Japanese yen. It's not really them, it's us that's moving it.
All right, also a big rise in the dollar over the last month or so, too. So that's also something important to note. You put out a note, it was actually a little while ago, talking about dividends. We actually were talking earlier this week about dividends as well. B of A coming out with their own note about the importance of dividends in your investments going forward. I just want to ask you about two strategies. It's the Dividend Aristocrats right here. We're showing it right there, NOBL, and also the VIG. It's another Vanguard dividend ETF. Are these the kind of things you're talking about? These are where, you're seeing consecutive years of dividend growth in these companies, these kind of ETFs, lagging the broader market a little bit. But are these the kind of strategies that you were advocating for in your note?
So I'd say, most importantly, is that if you're not taking a really strong view on which policy we're going to pursue, which candidate is going to get exactly what they want, who's going to be sitting in Congress, this is the kind of strategy that has had long-term outperformance. But it's lagged behind large cap tech. And it's one of the greatest ways in which to build wealth over a long period.
All right.